Is it time to buy stocks now? This simple two-step recipe says yes. And Tom Lee says we're in the process of a multi-year bottom. So, what exactly do I do? Because stocks have been on fire in the last week. Maybe the more important question is what should we be buying? Because earnings growth is finally seen outside of the mega caps. This will be for the first time going back to 2021. It's pretty significant. So, without wasting any more time, let's see what the biggest bull on Wall Street has to say.
They always say bottoms are tough and bottoms are a process, and small caps are really in the process of what we think is a multi-year bottom. And so conviction is not going to be as strong as things that have been working. I think most people's toolkit is to buy the triple Q, the NASDAQ or the AI names when they want to get back in the markets. But cutting rates at a time when small caps trade at 10 times forward PE, better earnings growth, and then a visible path to easing, I would say it still makes sense that the risk reward is in small caps.
All right, that's a pretty simple message. And if you've been listening for the last 60 seconds, that's basically what I just showed you. I showed you that we're now expecting earnings growth outside of mega caps for the first time going back to 2021. We've also talked about how this is a historic spike on the VIX. Unless there's a global lockdown, a global financial crisis, now might be a time to buy. And Tom Lee is saying that small caps provide a good risk reward and they're forming a multi-year base. Well, they've been forming a multi-year base for a long time. So what's really important is that a lot of individual names are actually back above the 50 DMA, which means momentum's actually shifting back to the being bullish. The one thing that gives me pause, though, is that 64% of people think we're going to go higher. When retail is this much on one side, it often means that we're not going to get exactly what they want. We're currently in fear, which is progress. And this is normally a time we want to buy because when we go from extreme fear into fear, we normally go back up to greed, if not higher. This time we went back all the way down to extreme fear, and now we've exited. So which means the dips are likely for buying. So now let's go through and find out a little bit more about what happened this week. Here we go. The sell-off compared to average declines. After we get a 5% decline, the average move is negative 11.8. We basically got a correction at 9.7. And then stocks stamped back violently. Look at this. NASDAQ number 1, S&P number 2, Russell number 3, Dow Jones number 4. Okay. And this is important because now Goldman Sachs is actually cutting their recession outlook to 20 from 25. And they can actually even reduce it further down to 15 if they get a good jobs report. Excellent. So earnings season's almost over. There's some companies that mattered in here, but for the most part, we got Home Depot, we got Walmart last week, which showed the consumer's fairly strong. So what's Jerome Powell going to have to say when he speaks this week at Jackson Hole? This will be important because we have European CPI. We got the FOMC meeting minutes, which are likely going to be a bit stale now. So it's really all about Friday at 10 o'clock when Jerome Powell speaks at Jackson Hole. Here's the Fed's calendar. On the 23rd, we're going to have Jackson Hole. On the 6th, we got the jobs report. On the 11th, CPI. And then the Fed decides on the 18th. So what are they likely going to do? Well, we don't think Powell will shut the door on a 50 basis point cut, and it's going to be appropriate to cut. It's a matter of how much and for how long. So a lot of people are talking about what the probabilities are. I don't think it really matters. They're going to be cutting. It's a matter of how much. And because Jerome Powell is going to be finishing off the week, here's the really important part. If an expansion signal is number 2 or closing over that previous candle high, all we're basically looking for is for a green week because we basically closed at or near the high this week. So if all the way into Friday, we managed to make progress, hey, it's bullish. We're going to keep expanding. So here's something that's a little bit tricky. Right now, Q3 GDP from the St. Louis Fed is actually back down to 1.98. This is still a good number, but we know that inflation is still above that. So this is the time to consider that 50 basis point cut like is being discussed here. I don't know what Jerome Powell's going to do, but there's definitely a lot happening in the mix right now. All right, if now we look to how we got to here, Goldman Sachs told us that a wall of money was going to flow into the market in early July. Well, that's exactly what happened. And if you remember, going back to 1928, the first 15 days are usually the best of the year. After July 17th, which is ironically pretty much the date we topped right here, it's on the 16th. And then that's when Trump was talking about not defending a certain country. You probably know which one. The market went down, and then all the way back up. And that massive spike on the VIX really tells me that investors are ready. Sorry, they weren't ready. But now, if they need insurance, there was a rush. They've bought everything they need. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel. Thank you very much ahead of time. Okay, so if now we understand that this is what normally happens, and as Tom Lee says in the interview, August is usually a month where the market bottoms, what's going to happen with the $6.15 trillion if the Fed does cut? It means they're going to make less money, just like what's happened every previous time. It goes from 5 right back down to 0. Here we go to roughly 2, right back down to 0. So as the rate the Fed is going to pay for you to hold on to money in money market funds, basically the $6 trillion, they're going to have to find a new home. Where is that going to go? Well, probably at least partially into stocks. I think so. So here's the question you have to ask yourself. If it's time to buy stocks right now, you're probably going to fall into bucket number 2. Again, what you're going to regret more if you do own or don't own stocks. If you fall into number 1, then don't do anything right now. Wait for the monthly candle close, because right now we don't actually have bullish confirmation. Why? Well, we printed a lower low, but we did not actually close the month out yet. Remember, NVIDIA also reports on the 28th. So this market's moving fast. In this exact same bottoming process, we're looking here on the weekly chart for the S&P, which is also on the NASDAQ. Again, failed breakdown, expansion signal. Now what we need to see is for that to progress to the monthly timeframes. As of right now, we got number 1. We got a failed breakdown. But I would not argue there's an expansion signal quite yet. Why? It's not there. Let's look back to previous times. If we look right here, it's not a failed breakdown, but by closing over the candle high, we get 1, 2, 3 more months of expansion. Same time here, we get a corrective wave, close over the candle high, 1, 2, 3, 4, 5 months of expansion. It's pretty simple. Don't overlook this. It's really simple. So as we try to finish the story off, what else do we have here? Talked about July 17th. Remember, when the market is up more than 10% of the middle of the year, 82% chance we're going to be higher, roughly double digits. And when we have more than 20 record highs in the midpoint of the year, 80% chance we're going to be higher. It's a matter of how much. So Tom Lee is basically saying we're in the middle of a multi-year bottoming process. I've been talking a lot about how it's 1995. The VIX is also showing us those same signals because there's no reason for the VIX to spike this high, this fast, and then go all the way back down unless something else is happening, like it's 1995. So everyone's talking about the SAM rule. Well, what does Claudia Sahm have to say about the rule now? Let's read it. She explains why the signal this time could be misleading, but also why, regardless of whether we're in a recession or not, the Fed must be on guard for a weakening labor market. Oh, that sounds like bullish. Yeah, it does. The GDP print's not yet final. So again, I want to take that with a grain of salt. 2% is still considered to be full GDP. But read this headline here. This is from today, August 18th. Busiest U.S. ports absorb import surge nearing, again, the lockdown era frenzy. This does not sound like we're currently in a contraction or a recession. This sounds bullish. So in case it's not clear, now let's go through a couple more charts because I really want to leave you with a simple story. A lot of individual names are now back above their 50 DMA. Look at the S&P here. Look at the NASDAQ. That's 2 consecutive candle closes over the shortest time frame. If we continue to make progress this week, it means we're going to be going higher, just like the RSP did. If you look at IWM, which is what Tom Lee talked about, hey, if we backtest and fill the gap, just like on the S&P, that's a backtest to the 50. That's where we should find buyers. And now, as we think about higher time frames, here I'm going to focus on the S&P and the NASDAQ. Hey, great. We're going up on the weekly chart. We got a bottoming pattern. We just need to see more progress, which means closing green on the week by Friday. And then we have to wait until the end of next month, just like the bears have to. As of right now, they've done number 1, but they failed to do number 2. They can still do it, though. We got to get back above 537 for that to happen. And they can still get us there. Jerome Powell could be hawkish. NVIDIA could disappoint. There could be things that take us lower. I'm just not as confident. For the bears to truly win, they need to win this month, and they have to also win in September. So what does that mean? Be patient, like Warren Buffett always says. And with that said, if you want to subscribe on the left, thank you so much. If not, I'll see you at 9:15 and 9:30 a.m. on Monday. Thanks so much.